All right. Hello, everyone. Welcome to your Christmas week market check-in here with myself, Greta Ball. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and leader of T3 Live's Pro Desk.
Sorry about that.
All good. Pro Desk virtual trading floor. Before we get into any market-related discussions here, just a quick look at Derrick's current positions as of our recording here today. On Monday, December 22nd, we are 3 days away from Christmas and only 2.5 trading days in the week. So we are here for Christmas week market update. So Derrick, how is your Monday going so far? It's been a while since we talked. So how's your trading been over the past 3 weeks?
Good. I was on vacation for a week or so in the beginning of December, but still managed to trade every day. I got a pretty bullish lean on this market right now. So we had a really strong kind of Thursday, Friday last week, gap up continuation today. I think that Santa is coming to town. The technicals are back intact and the flow of funds is looking bullish. And, there's I think a 77% hit rate on a positive last 2 weeks of the year in December. So it's kind of what I'm banking on, specifically looking at what I call the crappy companies. For the biggest bounces, honestly, into the end of the year here, quantum computing, crypto, all the stuff that you may often see me a hater of is all the stuff that I like right now into the end of the year.
All right. So when it comes to a short week like this, we have today, tomorrow, and then a half day on Wednesday, 2.5 trading sessions. Of course, a lot of people are not participating in the market this week, but you are. So are many other traders. When we have low volume like this, do you feel that you get higher volatility in the market and maybe some good opportunities that you want to get otherwise?
When you're in holiday trading sessions, it tends to be one of two ways: either extremely, extremely boring because there's just nothing going on and there's no one around to move the market, or really exciting because you're in a lower liquidity environment. And if you can get some sort of major headline, market moving headline, then you can get significantly larger movements from the market than you would otherwise. And spreads open up and things can just be, pretty fast and loose because everyone's on vacation and there's just not enough liquidity out there to support things structurally. So always impossible to know exactly which one of those seasons you're going to have. If you have to guess, more times than not, it honestly is boring. And today has been a bullish but kind of boring session, at least at the index level. There's been some decent opportunities in some individual stocks. But more likely than not, it'll be bullish. But I do like to pay attention on days like today. I do like to stay at my seat because you never know if the right headline hits. All of a sudden, things can get a little bit wild. And we do have some economic numbers tomorrow to kind of round out the end of the year that maybe could be a little bit market moving and wake things up.
You and I have talked many times about seasonality. When it came to September, October, the seasonally weak period of the year. Now we're in the seasonally very strong period of the year. Has this end of the year surprised you at all in the action you've seen so far? Before we get here, and it seems the Santa rally is on.
Not really. We had a pretty weak day on Thursday of last week, which I was a little bit surprised by, but it makes plenty of sense when you know why we pulled back. It's the AI trade. So what I've been telling the team that I work with through the Pro Desk virtual trading floor is basically, guys, I'm really bullish into the end of the year and honestly for the beginning of next year as well. However, we have to pay really close attention to the AI trade. The AI trade is 85% of the stock market's gains for 2025 and pretty much 100% of the economy. I think we probably would be in a recession or at zero GDP growth if it wasn't for AI CapEx spend. So it's the most important trade that's out there. And when you're seeing like AVGO sell off on really good earnings and you're seeing, at least initially, Micron not be up as much as you would expect it would be on one of the most phenomenal earnings reports I've ever seen in my history of trading, you scratch your head a little bit and you're like, okay, is the AI trade actually really running out of steam? And again, last Thursday, with those names kind of selling down a little bit, the market lost an important technical support level around SPY 679, 680. So at that point, I was telling the team, I was like, guys, we got to respect the technicals. I want to be really bullish into the end of the year. I think the flow of funds is bullish, seasonality is bullish, but the technicals are not confirming the thesis unless we can really recapture 679 in the SPYs. And we attempted to do that on Thursday, but couldn't quite close above it. And then on Friday, we were able to do it. So as far as I'm concerned, as the Friday's close, the technicals are confirming the seasonality, the bullish flow of funds. And then today, we're getting the continuation. The S&P's up another 0.6% today. To be clear, though, I'm not really expecting like heavy upside momentum. I'm expecting more of like an upside grind through the end of the year and through the beginning of next year. I think on average in the last 2 weeks of December, the market goes up like 1.3% or something like that, which, is not a huge move. But when you consider how many trading sessions there actually are in the last 2 weeks of the year between the Christmas and New Year's holidays, it's significant move at a pretty high hit rate.
When it comes to a short week like this, when you only have really, let me do some math here, 20 hours to trade ish, not even less, I think, total, in the year or in the week, not the year. Do you navigate a week like this any differently than you do a normal week, like when it comes to putting on swings and stuff like that on a Monday?
No, I really don't. I mean, for me, trading is just like a continuous flow that almost never seems to end, regardless of how many days that are left in the year, week, month, et cetera. It's just a constant flow of what's the next opportunity, what's moving, where do I think I can make money for myself. And even today, I mean, the one thing that I would suggest, but this is more psychological in nature than anything else, is don't put yourself in the position to take big losses around this time of the year. No one wants to hang out with the Grinch on Christmas Day because you lost too much money trading the half day on Christmas Eve. So please don't be that person. Put yourself in the position to just have a really good holiday season and make or lose smaller amounts of money, preferably make smaller amounts of money into the end of the year, and then just enjoy the time with family. But as far as my trading goes, for today, as an example, it's business as usual. I'm in, 19. I'm in exactly 20 positions right now as we're having this conversation. In addition to that, I day traded another 4 positions completely intraday that I'm already out of, and a couple others I'll probably be out of by the close. So picking my spots, finding some opportunity to make a few dollars in names that are moving, and that's it. Trying to honestly start my days a little bit later and end them a little bit earlier, just because it's a week to spend time with family and friends, and a little bit less in front of the market. And it's important that we remember the reason why we're in this business is because we want to have good lives, and you need to make sure that you're enjoying them.
I feel like the main days of the week are going to be like today, tomorrow, but you do actually have a trading session on Friday. Christmas is on Thursday, so the market's back open Friday for a full normal day. What do you expect on the Friday after Christmas for this market?
I mean, there's always a little bit of opportunity to be open, but I think that Friday, and I think we have the same issue with New Year's next week also, where there's a Thursday holiday and then Friday we're closed. It's so dumb that the market's even open that day. It should just really be closed. But there's an antiquated law. I don't know if you know this. There's an antiquated law that the stock market is not allowed to be closed for more than 3 days in a row. So if there's ever like a Thursday holiday, like the Thanksgiving holiday as an example, they always have to have that Friday open. I think it stems back to the World War II period of time. And the idea behind it is that, sometimes people need access to their money, and you can't just have the stock market closed for weeks on end, as an example, and make it so that people can't have access to their funds. So they have that law in place, but I think in this day and age, it's a little bit antiquated, and we should be allowed to have a 4-day weekend, around the holiday season. It used to be that the market was actually open for a half day every Saturday also, which I'm glad is no longer the case. But as I say all that, we're going to be going into like 24/5, 24-hour day trading soon. It's already starting to happen. So just even more opportunity for the robots to keep trading away.
I was going to ask you about the 24/7. Oh, I muted my mic in the middle of that. The Nasdaq, has officially filed for 24/7 trading, and they've got a question about it, as you were saying, that how is the 23-hour trading day going to affect professional traders, as gaps are such an important part of their strategy. So, answer that question, and then just your overall thoughts on the possible transition to 24-hour trading and what it's going to mean for the market.
Yeah. So where do I begin here? I've got some concerns for sure. One of my concerns. So there's already some degree of 24-hour trading through. I think it's called Blue Sky or Blue Owl or Blue something that already exists. So, like for example, if you were to go to Yahoo Finance at 10 p.m. one night and type in Palantir, it's actually going to give you a quote for where Palantir is trading at 10 p.m. It's not just giving you the quote that ended at 8 p.m., which is Eastern time, which is traditionally when the market closes. One of the things that I'm most concerned about, honestly, is just from a risk perspective on swing positions. There is no liquidity. First of all, there's very little liquidity oftentimes between 6 and 8 p.m. to begin with. And that's including normal after hours trading. Now, when you're going past the 8 p.m. period of time, it seems like there's no liquidity there at all. And I have seen some stocks, including some stocks that I've been in and swinging overnight, trade at just obscene prices in the middle of the night. But usually by the time like 4 or 5 a.m. comes around, which is when the traditional pre-market opens, they're all the way back to kind of where they should be. So I've got mixed feelings about it. On the one hand, I guess it breeds a lot of opportunity if you're able to take advantage of those massive price fluctuations that are occurring at those hours. The other hand is, from a risk perspective, it's like I might be forcing myself to blow out of a position because of where it's trading at midnight that never would have happened if the middle of the night trading wasn't open. So it'll be interesting to see how that plays out. Honestly, for me, it's further impetus to do something that I've had on the back burner for a long time and just haven't done it because I don't know how to code. But basically, that is to automate one of my strategies. I've already kind of been slowly working on it a little bit, but then I can go to sleep and it can continue to trade all day and all night. So working on that a little bit, and that's potential benefit obviously because the robot will never turn off and can trade all night. To answer the question directly on gaps though, it depends on trading volume. So like I ask myself, and I don't always know the direct answer to this, what matters more to me? The gap that I see in charts that happens between 8 p.m. and 4 a.m. or the gap that happens in charts between 4 p.m. and 9:30 a.m. And the truth of the matter is, for my trading personally, both matter because I'm doing a lot of swing trading. So for me, if I have a swing trade on and my game plan for my swing trade says I'm supposed to buy or sell stock at a certain price, I don't care if that's happening at 10 a.m., 1 p.m., or if it's happening at 5:30 in the morning or 6:30 in the evening. If the stock is trading at that price and I can get my fill, then I want my fill. So therefore, how the market gaps at 4 a.m. actually matters to me, provided that I'm awake. I try not to wake up at 4, but I'm usually up by, somewhere between 4:45 and 6 every day. That gap matters to me, but the more important gap is still where the market is opening at 9:30 versus where it closed at 4 because of the volume. Another similar question that I get that I think helps with the concept is, hey, Derrick, do you, during trading hours, use charts that include the pre and post market? And my answer to that is no. I look at pre and post market charts in the pre and post market, but when the market's actually open, I don't look at pre and post market charts. Sometimes there's a couple important levels from the pre or post market that I've noted. Maybe I put an alert out into my system for it. But especially with many stocks are so extremely illiquid in the early mornings that the couple hundred shares that went off that maybe created a pivot low at 5 a.m. doesn't matter at all from a technical perspective for the stock, because the volume comes in at 9:30, and that's what is creating price memory. And price memory is what we're actually studying when we're looking at charts to understand where previous supply and demand was, to have a better understanding of where future supply and demand may be. So I think that, to directly answer the question, the 9:30 a.m. gap will always matter unless you begin to show me a market that's trading as much volume as it does between 9:30 and 24 hours. So I think that you'll still have the gap advantage at 9:30. But the flip side is that, you might be able to take advantage of some liquid price movements that are occurring in the middle of the night, or you might be getting blown out of positions because they're illiquidly getting to your stop loss in the middle of the night, which is honestly my bigger concern.
All right, good stuff. All right, so like you've said, it feels Santa's definitely coming to town for Wall Street, and the Santa rally is on. So what's your strategy here for the last 8 trading sessions, or 7.5 trading sessions of 2025?
Buying shallow dips. Buying shallow dips is my focus. The game plan, just as an example that we had from a market perspective this morning with the team, was, guys, we're having a gap up this morning. We're going to have some opening upside extension. You might even be able to look for like a cute opening short when we first open to take advantage of that extension. But once we're no longer extended, that's the dip I want to buy for the grind higher that I think is going to last through the end of the year. So I'm looking to consistently buy small dips. I'm doing it at the index level, in the S&P, in the NASDAQ. I'm doing it at the ETF level with semiconductors. I'm doing it at the individual stock level. And I specifically like names that have either already been strong throughout the year, like a Google, which is a name that I'm long, or some of these meme type stocks. RGTI is a name that I've been swinging long. QBTS was a name that was swinging long over the weekend. Crypto related names, even though I don't have any positions on those specifically right now myself. Those are the types of things that I'm looking for right now for strength into the end of the year. And honestly, that continues through the beginning of January. And then I think it'll be a mid-January or mid-February, probably more likely mid-February period of time, where we then need to be reassessing these same worrying situations related to AI CapEx spend, and if it's going to be generating the revenue that is necessary for these companies to continue to spend the way that they're spending to justify it. So but for now, in the short run, the institutions are taking a step back. Retail continues to trade this period of time. Market's more liquid, but it tends to be bullish. Just trying to take advantage of it and finish out the year on a positive note.
I wanted to get your take on earnings season now that it's pretty much actually done, and Broadcom and Micron being kind of the very end important reports that the market got. So when you look back on Q3 earnings season, what's your takeaway from what we just saw?
It's the same principle that I know you and I have discussed earnings season after earnings season. We consistently see it, and it was the same principle applied this time around. Is the stock up a ton into the report, then a good report's not going to be good enough? Is it down a ton into the report, in which case a decent report might really propel this thing higher? It seemed like that theory or rule or whatever that I am constantly talking about, once again, completely applied on this last earnings season. And, recent examples of like AVGO and Micron are just perfect examples of that theory. The AVGO earnings report was excellent. It was really excellent. You really had to be going deep into the weeds to try to find a problem with it. And they said that the the 1 year revenue guidance was not bullish enough, given how bullish the first quarter revenue guidance is for 2026 for AVGO, which is like, what? And that's besides the fact that AVGO, I think, has a reputation of kind of keeping their estimates their guidance a little bit on the low side. And that was enough to be able to sell AVGO down from 404 all the way to 321 before it finally pivoted back up last week. So, but it was up so much in the report that they had fully priced it in. And then you go to Micron that just occurred last week. That Micron report is probably the best tech report that I have ever seen in my career trading, with the exception of the only one that you can compare it to is NVIDIA in May of 2023, where it had that insane gap up, never stopped from that point, and triggered the entire movement that has controlled the entirety of the stock market and economy pretty much ever since then. That Micron report is the only one that I've ever seen that's similar to that NVIDIA one. And Micron was up, what, 10% on the earnings report? It was nothing compared to how badly they absolutely destroyed earnings. And I know now they're continuing. They're up again today. It's up 2.5% right now as we're talking. But that Micron report was mind blowing. And yeah, there's a couple of things in there that you can nitpick about. Like, for example, the revenue guidance that they're giving is based on a lot of that business to business revenue guidance. The market's a little bit nervous of right now because everybody's asking, is OpenAI actually going to be able to follow through on their $1.5 trillion in capital commitments that they've made amongst all the partnerships that they're doing? So that's kind of the grain of salt in Micron. But that Micron report, the stock should be up 60% on that. I mean, it was insane. But Micron is up huge into the report and was only able to muster a 10% move, or maybe even a little bit less, on like the most phenomenal tech report I've ever seen. So, that just continues to be something that we want to pay attention to. I think for every single earnings season is not just, what the expectations are for the report. It is what has the stock done into it? What is the feel of the stock kind of going into it? If you're up too much, you're not going to be able to continue unless the report is absolutely phenomenal.
All right. Derrick, any final messages for all of the traders out there who are watching as we head into Christmas and the New Year?
Sure. And is this our last? Our last?
This will be our last of the year because I'm out of office next Monday, so we won't be back until 2026.
Sure. Yeah. So 2025 was a very, I would describe it as an irregular year. Not every trading year that I've ever traded is obviously unique from every other year that I've ever traded. It all has its own nuances. But this year was particularly crazy. The way we started the year off with the heavy sell-off that bottomed in April, and then the way we grinded higher through the summer season and through even periods of time that were traditionally a little bit more seasonally weak, like the month of September, month of August. We did see a little bit of volatility come in on October, but it was still strong. It was just a very, very unusual calendar year. And then November, which tends to be the strongest month of the year, was not that strong. So, a lot of like the traditional seasonality stuff did not play out this year in the way that it normally does. And that's because, again, it was a very unique year in terms of some of the news and the macro stuff that was impacting the market. I would describe overall 2025 to have been a tricky year because of that. I know for myself personally, I had some periods of really, really great success, and I had some periods that were marked by losses and that were really difficult. What I can tell traders, especially anybody who's new or out there, is that if you're really making a career out of this, like I am, it's not about one trade, 1 week, or 1 month. It's about how you put together the entirety of a year, which is trade after trade and day after day and week after week, that it's this constant flow of the next trade, the next trade, the next trade. And you just want to consistently focus on doing things correctly over time, following your game plans, following your risk management. And then that is the real key to long-term success in this business. We get so, and I'm this way too, so recency focused with our trading. The trade that you're in right now is always the most important trade that you're ever going to have in your entire career. And we need to learn to let go of that mentality, because that's the reason why you don't follow the game plan. You don't follow your risk management rules. You take losses eventually that are significantly larger than they should have been otherwise. And you just got to remember, as you go into the new year and you survived the year of 2025 and all the insanity that we went through, it means that you're working towards a career in this, and that you need to recognize that this is something that you're trying to do, not for a week, not for a month, but for hopefully decades. And if you have that mentality of it's never today that matters, it's never this one trade that matters, it doesn't matter that this trade failed or I lost money today, or even if I had an entire negative week or an entire negative month, it's not going to matter over the course of a 30-year career. That trade that you're fretting about right now because it's moving against you and you really don't want to take that loss, if you're good enough to be in this business 10 years from now, most likely you're not even going to remember that trade even occurred, unless you allow it to be that way because you didn't follow the risk management rules to the point where it became such an incredibly outsized loss that then you remember it forever. So don't allow that to happen. The small losses, I promise, you will forget about within 6 months, within a day, maybe even. But the losses that occur because you didn't follow your rules and they become outsized and they have like an actual impact on your life, on your career, on your trading year, those are the ones that you will remember. Don't have those memorable trades. Don't have those memorable trades. Do everything you can to never have those memorable trades. And the way to do that, again, is just following your risk management rules. Keep it so that the memorable trades that you have are the ones where it's, oh my gosh, I can't believe how much money I made on this by following my game plan and doing everything right and not just liquidating the position as soon as it was a little bit in my favor. So I think that probably counts as my year-end advice after what was a pretty unusual and wild calendar year.
Mm-hmm. It was a wild year. From the comments on YouTube, Crusher Trade said, I love listening to T3 Traders. Thank you for your service. I agree. I feel I'm so lucky. It's my job to talk to all of you, and I get to learn from all of you, and I get paid for it. It's great. So we have a great team of traders here. Again, Derrick is a real trader, the head trader at T3 Trading Group. If you'd like to work with Derrick, have the opportunity to do so, you go to t3live.com/DO live and get some info on Derrick and T3 Trading Group and the whole team over there. So again, Derrick, have a wonderful Christmas and a wonderful New Year, and you and I will see each other we'll see you next year.
Awesome. You too, Greta. Have a happy New Year. Have a wonderful holiday, and I'll talk to you soon.
All right. Have a good one.